GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as satisfying as waking up before your alarm. I'm your host, Jay Hamilton, and today we're joined by the Bitwise Boys. We got Matt Hougan, CIO at Bitwise, and Ryan Rasmussen, the head of research, back on the show. If you guys don't know Bitwise, one of the largest crypto funds, has a big ETF. These guys know all about what is happening on the TradFi and the crypto world in the intersection there. Larry Fink said 500 to 700K Bitcoin on Bloomberg just yesterday. We're going to talk about that. We're talking about the Trump effect, short-term, long-term impacts of the regulatory shift that is coming, what to expect from ETFs in 2025. We talked yesterday with James about that, and now we're going to talk about that with the Bitwise Boys. And then also, everybody is talking about countries buying Bitcoin and corporations buying Bitcoin. Well, what's actually happening though? How many countries are buying? What do we expect to happen this year and in the future years? We're going to dive into all of that. Myself and the rest of the Milk Road team are constantly being asked for our opinion on tokens. Should I buy XRP? Is it too late to buy virtuals? Is there still opportunity for AIXBT? Well, we wanted to make sure you had a quick and easy way to get all this information from us. So the Milk Road team has been cooking, and they just launched the Token Center. The Token Center is your one-stop shop to get our rating on the top tokens. Each token is given a rating of bullish, bearish, or neutral. It's even color-coded, so it's super easy to digest. And our ratings aren't just random guesses. They're based on thorough examination of market performance, social sentiment, ecosystem growth, and a whole lot more. If you want to see what our ratings are for the top tokens right now, hit the QR code on the screen or the link in the show notes and head over to the Token Center to get the alpha today. Meet Odos, the DeFi aggregator that makes your token swap smarter, faster, and a whole lot easier. Tired of trading like it's 2019? Odos finds the best prices for your swaps across 900 liquidity sources and 14 blockchains, so you always get more bang for your crypto buck. Whether you're swapping, setting a limit order, or just avoiding gas fees like the plague, Odos has you covered. It's like having a genius trader in your pocket, minus the coffee addiction. Join 3 million wallets already using Odos to power over 6 billion in monthly trades. Start making smarter swaps today at milkroad.com/Odos. Ryan, Matt, welcome back to the show.
It's amazing to be here. Thanks for having us.
Thank you. Always a pleasure to have you guys. Always a pleasure. Okay, let's start with, I can pull up a tweet from Matt. Matt, you tweeted this out yesterday. You said, 2 weeks ago, Solana was considered an illegal security offering by the SEC. This weekend, the president launched a meme coin on Solana. The change in DC is not remotely priced in. Why did you tweet this? What were your thoughts?
Yeah, the experience I've been having, because we're living in this thing where news breaks every few minutes, is that people have sort of lost the plot. We get worried when an executive order is delayed by a few hours or is slightly different than we expected. And I want to find as many ways I can to remind people that there has been this systemic shift in the environment. I mean, what I wrote is literally true, which is a few weeks ago, the SEC held Solana as an illegal securities offering that ostensibly it wanted to eventually shut down. And now the president of the United States is launching meme coins, on Solana specifically. It's impossible for people to realize how much the winds have shifted. Governments don't turn on a dime. That's not something I've experienced in my lifetime. This has turned 180 degrees and started going down the track in the opposite direction at 1,000 miles per hour. And I just thought this was a good example to remind people that that's what's happening, which means as a long-term investor, the thing to do is just either sit on your hands or buy more. It's not to worry about these short-term things. So that's why I put that out there.
Yeah, it's so true. And I want to jump into later in the show the Solana ETF and your expectations there, since we bring up Solana. But Matt, before we recorded, I just want to dive a little bit more deeper into your sort of 30,000 foot view right now. And you had some great takes on, does macro really matter? What really matters right now in this, as you said, day-to-day world where it's like there's so much happening, and I think all three of us probably would agree that we're just getting started in the news cycle and in the attention cycle that's coming to crypto and Bitcoin and all of our assets over the next year. what really matters right now?
Yeah. Well, I think macro, since you mentioned it, doesn't matter, right?
Mm,
Like there's an element as an investor that you're always fighting the last battle. And the last battle in crypto was all about interest rates and inflation. What was Jerome Powell doing was the most important thing happening in the crypto market. What the latest CPI or PPI, we stood on edge waiting for that. That defined our week, our month, our quarter. Now who cares? The Fed lowers rates by 25 basis points. Who cares? The US is establishing a strategic Bitcoin reserve. The Fed raises rates by 25 basis points. Who cares? Larry Fink says Bitcoin's going to $500,000 or beyond. I don't know. The CPI comes in 0.2 percentage percent hot because there was a automobile manufacturing issue. Who cares, right? Solana is no longer in the regulatory doghouse. Ethereum has lost a little bit of its regulatory moat. The world's largest banks are building on crypto. Those things are 100 times bigger than these 25 basis point things that we used to worry about. So I think the game has just shifted. What matters now is what we see out of the White House, what we see out of Congress, and importantly, what we see out of venture capitalists and builders. I'm betting that we're entering this golden age of crypto where we're going to see 1 million new entrepreneurs building serious projects openly on blockchains and traditional companies building serious projects on blockchain. That's what I'm tracking. And I've just sort of discarded Jerome Powell. He can do what he wants to do in the corner, he can play with his toys. But there's a bigger game afoot, I think, in crypto. And that's what I'm focused on.
yeah, it's very. I mean, also the macro situation is also very difficult to understand right now too. It is never been so. It doesn't seem nothing seems to make sense anymore on the macro side, basically, right? So I think even trying to understand it's almost reassuring to just say, okay, maybe I can actually just leave that to the side for a minute.
I think that's so right. Because if you think about something like inflation, there are these massive inflationary forces looming on the horizon, right? Tariffs and onshoring and nearshoring, which could dramatically impact inflation. And then there are these massive deflationary potential forces like Dogecoins, I mean, like Doge, the Department of Governmental Efficiency, and potential recession and Europe in crisis. And so it's pulling at both sides, which means it's impossible to forecast. And I really strongly think that you can keep your eye on global monetary liquidity, you can keep your eye on deficits. Those still matter on the edges, but mostly that's not where the game is being fought right now. The game right now is crypto specific factors and regulation and app development and usage. And that's what I would focus on first and foremost.
For you guys in the seats that you sit in, have you seen any change in flows or interest from institutions, or who have you seen change from since maybe either since Trump got elected or since the inauguration?
Yeah.
Absolutely. I'm happy to take this one and pass it to you, Matt, to fill in the gaps here. Both Matt and I spend a ton of time on the road talking to Wall Street, whether those are financial advisors, family offices, hedge funds. We spend a lot of our time going out and talking about crypto with professional investors. And the change from 4 months ago to 2 months ago to today has just been a tectonic shift in the appetite and the attitude towards crypto. There's this great de-risking that has occurred since Trump won the election and now that Trump's in office. And you see that unfolding with things like Gary Gensler resigning and Hester Pierce being appointed to lead the SEC's crypto task force. You see things like, Bitcoin bull Senator Loomis being appointed as the chair of the Digital Asset Committee earlier this morning. So there's real traction and real things happening beneath the surface. And I think that has led to this absolute shift in how financial advisors and money managers and investors are thinking about crypto. It's no longer, what is Bitcoin? I need to understand every element of what a smart contract is or what a blockchain is or how mining works before I even think about investing. It's now shifted to, how should I put it in my portfolio? What is the sizing? 1%, 2%, 5%? And then what tools should I use? Should I use a momentum based strategy? Should I manage it more actively? Should I just buy and hold an ETF? And I think that is just representative of this massive de-risking that's happened. And that's just fueling the fire for demand for crypto and fueling the winds behind Wall Street coming into the crypto industry.
Yeah, completely agree. The change I've experienced, I was on a call yesterday with a $30 billion advisory firm, which we've been talking to for 3 years. And for 3 years, they were interested in crypto. They loved talking about it, and they loved talking about it, and they loved talking about it. And now they're moving forward to allocating. It's like your friend who always, threatens to move to another city for years and years. You're like, whatever. And then they make an offer on a house in Austin, and you're like, oh my God, you're actually leaving. That's what's happening now. And I'm having those meetings every day. And if I'm having those meetings every day, other people are as well. I think we're going to see a flood of assets. That's why I think there'll be record inflows to ETFs this year. I think we might get to something like $100 billion next year. I really think we're in the sort of exponential growth phase of institutional demand for crypto.
Yeah, I'm glad you brought up flows, because if we're going to stop looking at macro, then I want to look at flows. Like, that's the number one thing that I want to see, is like, where are the flows coming from? What is happening? And obviously the ETFs are a big part of flows for Bitcoin and ETH. Maybe ETH not so much for most of the year, but it ended the year fairly strongly, which is great to see. Let's chat about your expectations for the ETFs and for flows. What do you think we could see? And I would love to talk about Bitcoin ETH, but then I'd also love to talk about, what do you guys think is coming? I know you guys have some applications for some other ETFs that haven't been approved yet.
Would love to talk about flows. This is one area that we spend a lot of time thinking about at Bitwise. It's very core to our business. For Bitcoin and really for Ethereum ETFs, we expect there to be tremendous flows this year. There's this phenomenon that happens with ETFs, or maybe it's not even a phenomenon, it's just this pattern that happens with ETFs, where traditionally year one is the slowest year for asset flows. Then year two, asset flows get larger, year three, and so on. It's kind of the liquidity in AUM begets more liquidity in AUM. So I think for Bitcoin and for Ethereum, these ETFs having existed last year, I think we're going to see exceedingly more flows in 2025 than in 2024. Not just because this pattern is likely to repeat itself, but because there is so much pent up demand still from money managers who haven't been able to access Bitcoin and Ethereum, or haven't yet made those allocations because their risk committees or due diligence committees or investor committees just haven't kind of turned the faucet on, or the green light for them to do that. So I think that's one avenue of demand. We also have corporations that are buying Bitcoin. Maybe they'll allocate through ETFs. Maybe it doesn't make sense for governments to allocate through ETFs, but maybe they do. So there's all of these sides of demands coming into ETFs that we think flows will certainly accelerate in 2025. Obviously, that's great for price, because that's demand coming into an asset and buying spot Bitcoin, spot Ethereum, or spot other assets. Now we'll just add on other crypto ETPs. Of course, there's this compliance devil at our company on my shoulder saying I can't talk to, and Matt can't talk to specific ETP filings. But more broadly, clearly there is a different view from this regime around what assets, or how crypto assets are categorized, whether they are these illegal securities offerings, or if they are digital commodities or digital assets that we should allow investors to access through very popular and traditional vehicles like ETPs. So I think we'll see a significant uptick in the number of ETPs that go live this year. You've already seen an avalanche of ETP applications from a number of different issuers across a number of different assets and strategies. And I think that's just the tip of the iceberg in the first few days since this regime change has happened, and that we're going to see more and more products be applied for and filed for and ultimately come to market this year. And we'll see which ones have demand and which ones won't. Not all of them will be winners. Not all of them will be as successful as the Bitcoin ETPs or as the Ethereum ETPs have been in their first few months. But certainly there's demand for all kinds of different products. That's how it works in other industries. And I don't expect it to be any different in the crypto industry.
Yeah, I think that's right. Just to add a few notes on top of that, we had $1 billion in flows into the Bitcoin ETFs over the last 2 days. Not Bitwise, but as an industry, $1 billion in 2 days. We had 150 million into Ethereum ETFs. It's like the not dead yet parrot. Those things are going to be very significant in the future. I agree with Ryan. We're likely to see a large number of ETPs launch. We don't really know that yet, specifically in terms of when and where, because conversations are just opening up with the staff. But you have to imagine that the windows are open. One thing that I think will be interesting and maybe surprising, people might imagine that if you looked at the market cap of every asset, it would get a proportional amount of flows. I don't think that's what's going to happen. There's some large cap crypto assets that are effectively zombie coins, which no one is interested in allocating to. I suspect if those ETFs launch, no one will buy them because there's no proximate reason. And then there are assets that are really emergent that people are excited about. And I think those would attract significant flows, probably in excess of their market cap. So I think you need to put a little bit of sort of like your crypto native expertise when you're estimating flows. I don't think it's going to be a linear relationship, which I think many people assume.
That's great. Okay, let's talk about demand. So, and I'd love to break it down into different categories. Maybe, and I don't know which category or how you guys want to approach this, but like the categories in my mind are countries or sovereign funds. The corporations I find very interesting because I don't think many people talk about that. And then I would say more like the private wealth, the institutional wealth, that sort of, those feel like the three, are those the three categories of demand that are most significant to look at right now?
Yes, those are the three horsemen of insatiable demand. That is right. Yes.
Okay. Pat, you've always got the greatest one-liners. Okay, let's go through those categories. Let's start with countries, and let me pull up your guys' Bitcoin arm race visual because it's so fantastic. So for those listening on the podcast, I've got a visual up on screen which shows the Bitcoin holdings by country. So how many countries hold Bitcoin right now?
9 countries hold
Nine.
Bitcoin today.
Okay, and where are we at? Where do you think we're going in whatever time frame you guys, however you guys think about this?
I mean, so today 9 countries hold Bitcoin. Majority of the Bitcoin held by the 9 countries on the map here, some of which are huge sums, right? The US owns nearly 200,000 Bitcoin, China owns nearly 200,000 Bitcoin, and some of these countries hold a small amount, right? Some own 60, 50 Bitcoin. But most of this Bitcoin has been acquired through law enforcement seizures, right? So you can think of events like Mount Gox or Silk Road, where assets have been seized by the government through different law enforcement actions, right? But this doesn't account for additional purchases that we expect governments to start making as early as 2025 and then over the long term, many years down the road. So I think, where this is going is that the number of countries owning Bitcoin at least doubles this year, probably more than 20 by the end of the year. There's this game theory that plays out when one major country starts doing it, all the others will race to do it to catch up. And you've seen, the rumor mill churning around all these different major countries that are exploring the idea, whether it's Asia, Europe, or North America. And I think once one makes the first step, the race is on. So I think this number explodes dramatically over the next few years. It's important to also think about the fact that these are huge amounts of demand, right? It's not buying one Bitcoin or two Bitcoin. You're talking about buying billions of dollars worth of Bitcoin from a bunch of different countries. And that adds up very, very quickly. So that demand we expect to grow significantly over time. And it also removes this fear of the government, whether it's the US or China or another government, dumping the Bitcoin that they currently own, right? So it removes this kind of selling fear from the market and then adds this real amount of significant demand on the buy side. And that to me is just one of those, as Matt said, horsemen of demand coming into crypto.
Yeah. I love that. If I can add one more thing, Jay, on top of that, the other fear it removes to me, or at least really limits, is the risk of governments banning Bitcoin. I know when I moved full time into crypto, people would ask me these questions. What about criminal use? What about environmental use? Aren't there, you can't buy coffee with it. And I felt like Neo in the Matrix, like it was so easy to deflect all of these challenges. But then what if governments ban it? And my mind would go, well, that would be bad. And I actually couldn't see to the point how Bitcoin would come around to co-opt governments. And it felt like the last existential risk was a coordinated government banning across multiple countries, maybe across the G20. That would have been really bad, would force Bitcoin underground. And somehow, because Bitcoin is on this incredible journey, it found a way to co-opt governments. If that happens in 2025, I think it's straight to many hundreds of thousands or millions become within view. So I think it's really important from that perspective as well, of eliminating that last existential risk.
It just feels like, what's the odds that this doesn't happen? What's the odds that countries don't adopt? Because everybody is talking about it as if it's a done deal. It's just when is really, nobody knows when. Is it this year? Is it next year? Is it 4 years from now? Don't know. But Is there any chance that this doesn't happen?
Yeah. Yeah, of course. I mean, it should happen, right? Because it's
Right.
in their best interest, because you have this element of Pascal's wager where it's a low cost option. And if you don't participate, you're really long term in a bad place. And so I have a very high degree of confidence that will happen. But politics is driven by people, and people are weird. And it's not 100%. Ryan may disagree. He may think it's 100%. He can shut me down. But I think it's going to happen, and I think it's going to happen fast. But of course, there's a chance it doesn't materialize in the way we think. You know, Trump says we'll keep our Bitcoin, we're not buying more, and then our countries are like, eh. So that could happen. I don't think it's my base case. I don't know what you think, Ryan.
Yeah, I agree with that. It's not. I don't think it's 100%. Right. Few things in life are 100%. I think it's somewhere above 75% chance that this happens. I do feel strongly that there's a high level of impatience across the crypto industry right now. At least that's what it feels like on crypto Twitter. Right. This news drops this morning, or Senator Loomis tweets, big news coming soon, and people immediately assume it's a strategic Bitcoin reserve and then immediately say we're going to zero when it's just news that she's the digital asset committee chair. And then Trump's going to sign an executive order and host a call with El Salvador. People immediately say, this is it. This is strategic Bitcoin reserve. And if I was a betting man, I would bet that it's probably not. It's probably something around immigration. And it's unlikely that the go-to-market marketing strategy or PR strategy would be to announce a strategic Bitcoin reserve and then hold a call with El Salvador to talk about it. Doesn't really
I don't think
make
so.
that much sense. I'm not a marketing guy for what it's worth, but it doesn't make that much sense to me. So I think there's just this level of impatience out there that it needs to happen this week or even this month for it to matter. And I think that's just factually incorrect. I think it's a very high likelihood that it does happen. And again, I think it's going to happen at some point this year. Even if it doesn't happen this year, it's a long-term tailwind and a long-term funnel of insane demand into a supply-constrained asset. And with that framing, it's hard to think of a world where it's bearish.
Yeah, completely. I mean, it's very clear that the tailwinds without that happening this year are very strong. We don't even necessarily need that to happen this year. All of the prediction shows that we did, which we had both you guys on for as well over the holidays, everybody was very bullish Bitcoin without any sort of countries buying. So this, as you said, Matt, I think this is, if this happens this year, okay, now it might change some of our projections and some of our predictions as to where we could go in the short term, but it does sort of feel inevitable at this point. And so if you just step back and say, you know what, I'm gonna keep buying and I'm gonna hold and I'm not looking to trade, keep this simple, like long term, this is an obvious massive demand catalyst. Okay, let's talk about corporations and institutions buying. What's thoughts there and how Trump and regulation is affecting that?
Yeah, I can do corporations because this is of these three categories. This is the one where people are most skeptical, and people think it's just MicroStrategy. But there are a few important things I would point out. One, it's really not just MicroStrategy. There's 70 publicly traded companies. There are hundreds of private companies, including Bitwise, that keep Bitcoin on their balance sheet. And those 70 companies is going to become, in my view, a couple hundred this year. I don't often talk about arcane accounting laws, but I'm going to here because I think it's important. Until January 1st of this year, there was an accounting rule for publicly traded companies that if they bought Bitcoin, it was quote unquote an intangible asset subject to impairment testing, which in English means when you bought it, you would mark down the price you bought it. And if the price ever fell, you would mark it down. And then if it fell again, you would mark it down, and you could never mark it back up. So if you bought it at 50K and it went to 25K, you marked it at 25K, it ripped to 100, you had to hold it at 25K. So in other words, these 70 pioneers, yeah, believe it or not, this is true. These 70 pioneers put it on their balance sheet knowing it would only ever cause them to have lower earnings and lower asset values than in the past. They were still willing to do it. And that changed January 1st. There's a new FASB accounting rule. So now it's marked in all their genius. Now it's marked at the value of Bitcoin. Imagine that. It took them years to get to that. So now if someone is bullish on Bitcoin, they can put it on their balance sheet. And when it goes up, it adds to their earnings and adds to their asset value. If you're skeptical of this trend, just imagine that 70 publicly traded companies were willing to put their necks on the guillotine for an asset that can only go down in value. What happens when that's no longer true? What happens when the reputational risk around Bitcoin evaporates because the president is pro Bitcoin and Congress is pro Bitcoin? That 70 is going to go to 700, is my guess. For the same reason people buy Bitcoin, companies are going to buy Bitcoin. And the scale is significant, right? Remember, there are only 170,000 new Bitcoin produced every year. That's the supply. Last year, corporations bought something like 250, 270, 300,000 Bitcoin, more than all the supply. In this terrible accounting world, they could be buying 2, 3, 4x the supply. So I think this is a trend because people don't sort of understand this accounting quirk that they dramatically undercount. And I think it's going to be much bigger this year than people anticipate.
Well, I had no idea about that accounting rule. That is so shocking. And and
It's
and I mean, what a simple catalyst. I feel like, Matt, you always come out with these quirky rules that nobody else is paying attention to. Uh, it makes me think about the rule we talked about last time we had you on the show, when you talked about how oh, I'm trying to remember the rule here. It was something about how crypto is managed in retirement funds, maybe
yeah, that
IRAs, I think.
not is
There's a
not
rule
currently
changing
allowed
there.
in 401k plans. Yeah. Well,
Right.
I'm the guy who loves to read the footnotes. So, maybe that's my unique contribution to the space. But these things really matter, right? This can unlock billions of dollars of demand. The 401k thing can unlock hundreds of billions of dollars of demand. And I've seen this happen in my past TradFi life, where small changes in accounting or obscure rules can unleash an asset. And I just see it happening here. And as you said, not much discussion of it, but I do think it's a real game changer.
Mm-hmm. Okay, let's talk about the third horse, institutions. And the one thing that I just need to say that stands out to me about these three horse that I think is the difficult part to understand is, I think everybody conceptually understands that yes, these three players are going to buy Bitcoin and buy other cryptos as well. The difficult thing to understand is, like, it's very difficult to understand how can they buy it, when can they buy it, what are like the there's a lot of hurdles for all of these. It's not like you or I going to buy Bitcoin or going to buy crypto. All of these categories have to go through a lot of steps and a lot of time, and maybe it's legislation if it's on the countryside, or maybe it's tax issues if it's on the corporate side, or if it's on the institutional side, it's probably all these like internal regulations and policies and the safety around clients and the risk you can take. And so, like, when we had James on yesterday, he talked about how he thinks it could take up to 3 years for wealth advisors to be able to recommend crypto assets to their clients, which I was like, and he was like, we're only in year one. So I was like, whoa, we still got time to go. Maybe as you talk about institutions, if you could give us some context around where we are and how much more time, or what would it take in order for these flows to significantly start to increase.
I'm happy to take a stab at institutions. I think your conversation with James is accurate. We're still in the very early innings of a multi-year road to adoption from these institutions. If anyone listening has worked in traditional asset manager, I spent many years at a traditional asset manager. You just come around to realize there are so many different teams and departments involved in approving decisions ultimately at how the business moves forward. And that is the exact way that many of these large RAs or large asset managers or large wirehouses work when it comes to approving Bitcoin or crypto more broadly for their wealth managers and money managers to invest in. So if you think about, Bitcoin ETFs went live in January of last year. They're about a year old. Ethereum ETFs are about 6 months old. That's still very early in that due diligence and review and compliance process. And it's not only reviewing, should we allow them to invest in these assets, and then which products should we allow them to invest in? They also then have to educate their money managers and go through internal education processes. Then their money managers need to educate their clients. Then they ultimately have to decide, how should we allocate this, and then build the model portfolios and then start allocating, right? And the smaller companies can move a bit faster, but most of the wealth in America is controlled by these giant asset management companies that just move slow. It's like these giant, cruise ships trying to turn course and adopt this new asset class, and it's just something that's going to take time. So I think we speak to many advisors who are associated with larger wirehouses or larger firms that want to invest, and their clients want them to invest, but they just can't invest yet. And so I think that's going to be a multi-year adoption. I think we're further ahead today than we were a year ago, but I think we're still in the I don't know, first 10 percentile or first 20 percentile of what that adoption looks like. And then the last thing I'll add, and then Matt can fill in here where there's holes in what I'm saying, but I think something that's largely misunderstood across the wealth management space is that the next generation of money managers are all in on crypto. They're not, for the most part, skeptical of crypto. And so what we often see in these conversations with institutions and with professional investment firms is there's a younger generation of money managers who aren't the decision makers, but are pushing forward the adoption of crypto. And as they grow in their career, as they spin out and launch their own RAs and their own firms, as they get more and more assets through this generational transfer of wealth, as all of that happens, you're going to start seeing a huge uptick in the adoption from institutional investors. And I think that hasn't even really begun yet, because most of those earlier in their career wealth managers aren't the decision makers yet, but slowly they will become the decision makers, and slowly we'll see a huge spike in adoption.
Yeah, that's such a good point. I think that's really true. I saw that in my previous career in ETFs, and all the analysts who are just coming up are now running these giant asset managers that are all in on ETFs, and it's gone from $100 million to a $10 trillion industry. The other thing I would point out that I think people overlook: all the people who bought Bitcoin ETFs last year are going to buy more. There's this assumption that people invested once and they're done, but ask yourself, think about how much Bitcoin you own today. Did you buy all of that on day one? No, of course not. You dipped your toe in the water. I think if literally no new investor bought a Bitcoin or Ethereum ETF in 2025, and it was only the people who bought in 2024, we would still have record flows. I think they're going to double down and triple down on this asset, and people overlook that. They assume it's just these people who haven't come in. I agree, that's massive, and that's a decade-long trend. But once people are in, they all buy other assets, they buy more of the asset, and I think that alone is a tailwind that probably the market doesn't appreciate.
Mhm. Yeah. It seems so simple. It's almost too simple, which is why I feel like we discount it. We like to make things more complex than they should be. I feel like I just want to tell everybody, just keep buying Bitcoin, and you don't even need to listen to us anymore. You don't need to listen. Just keep buying Bitcoin. Don't pay attention to anything else, and just go about your business and check back in 10 years and you'll be good.
Yeah.
And I'll be out of a job in the meantime. So here's one question on my mind. How many of these three horsemen or others that impact flows in a big way are waiting for regulation? Was Trump launching a meme coin all that they needed? I know that's not true regulation, but it certainly is an indication of the type of regulation that we can expect. Or is there a lot that are on the sidelines still, and we need regulation first? And if that's the case, what do you guys expect to see in terms of regulation this year? I know you don't have a crystal ball, but do you think we're going to get it quickly here, or do you think this is government, it's a big cruise ship, it's going to take time, we still have to wait 6 to 12 months?
Yeah, it's a great question. Maybe I'll take a shot and Ryan can build. If I think about the value of any crypto asset, let's take Ethereum, there's an element that's speculative and an element that's fundamental. There's expectations that Ethereum will be more useful in the future, and there's actual day-to-day fees flowing through the Ethereum network and billions of dollars of users. I think the speculative element is being unleashed before we get the regulation. We don't need regulation for people to realize that Solana is now open to more use cases than it was 2 weeks ago. We don't need regulation to know that the Bank of America is talking at Davos about building on blockchains, and they weren't 2 weeks ago. So you can unleash that speculative element. I still think we're early in that, The fundamental piece where we start to see cash flow and we start to see users and we start to see new applications, that still needs regulatory clarity, right? Because if you're building a new DeFi protocol, can you have a fee switch? I don't know, right? If you're launching a new blockchain, what percentage can be held by insiders versus outside? I don't know, right? If you want to trade a securitized asset in a tokenized format through a broker dealer, those can't exist right now. How will that happen? I don't know. So we need that regulatory progress to unleash the fundamental aspect, but you're going to see people re-rate the speculative asset over the next few months. And I think re-rate it substantially higher as they realize, to go back to where we started, that the shift has been really significant.
Yeah, I agree with Matt there. I would add one data point from a survey that we run every year where we go out and survey financial advisors on their attitudes and approach to investing in crypto. Now, we ran this survey post-election heading into 2025. And one interesting data point there when it comes to regulatory uncertainty is that it's actually still very significant. It's a significant barrier to entry for a lot of professional investors and financial advisors, right? So in past surveys over past years, for many years in a row, regulatory uncertainty has remained a barrier to adoption for 60 to 65% of advisors. They said this has been the main reason by far that we haven't adopted crypto or Bitcoin in our portfolios, model portfolios, client portfolios. Now that number dropped to 50% this year. So we did see a big drop. You saw 20%, 30% drop year over year in the regulatory uncertainty being a barrier to entry. But still 50% of financial advisors view this regulatory uncertainty as as their top obstacle or top barrier to enter the market. So I do think as we get more and more clarity, as we see a pivot from the SEC, as we see more of these actions that the early actions we've seen by some regulatory agencies start to play out and trickle down to many of the way these firms and these advisors think about crypto, I do think that will reduce the barriers to entry and we'll start to see more and more come into the space. So I think it's really important, slightly less important than prior years or less concerning than prior years, but still, the number one obstacle for financial advisors is this regulatory uncertainty that we've been living in for literally a decade.
Mm-hmm, mm-hmm. Yeah. And it's pretty clear that we're going to get clarity. What that clarity looks like, don't know. When it will come, also don't really know. I think Trump is pretty motivated to move pretty quickly, but is this top of his priority list? Who knows, right? I don't think crypto's number one on his priority list. That's for sure. We haven't gotten any major executive orders yet, and that's okay. We don't need to be number one. We're there, and he is also surrounded by a lot of support who are big into crypto and tech acceleration. So there's all the ingredients are there. We'll just have to be patient, which I don't want to be patient. Come on, let's go now. Why not now?
Agreed.
Gentlemen, the Bitwise Boys, pleasure to have you guys on the show today. Thank you so much for joining us. Everybody listening in, if you don't follow Ryan and Matt on Twitter, you've got to follow these guys. They're great. We'll link to them in the show notes. We also will link to a couple of these guys' reports that they put out recently because they've got so much great stuff coming out. If you want to buy some ETFs, not financial advice, but check out Bitwise because they've got some great ETFs as well. Thanks for joining us today, gents.
Thanks for having us. It's fun.
Have an awesome, wicked awesome day, everybody. We'll see you again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.